Hi and welcome to Symax Fintech Weekly Market Insights. As usual, we've broken it down into 4 parts. First of all, our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone, but hopefully for you it is. And just be aware of leverage because you can lose substantially more than that initial investment. Everything included in these YouTubes and everything we do is just purely for educational purposes. We're not trying to encourage you to trade or invest. That must be your decision. And before you make that decision, you should carefully consider the risks involved, your financial situation, definitely your level of experience and also your risk appetite. Of course, only risk capital you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. It's really important. You know, I have so many people come on my courses because they've lost money. You know, why take that risk? Well, come and do a course with me. I'm not saying that you won't lose money, but I can certainly help you with your trading, that's for sure. You know, it's just the benefit of having 50 years in the markets. Okay, so looking back at last week, well, you know, there was lots of data out, and of course we had the central banks in action as well. So as usual, let's take a look at the US first. So PMI, manufacturing improved and services went down. So manufacturing was up to 49, just below sort of growth. Services was down to 52.4, so still strong. House price index was up again 0.7% month on month. So I think in America they're just getting used to these higher rates, and it's sort of having a little bit of a boost to the housing market. And again, if you know, that will feed through into durable goods, it will feed through into GDP, it's going to feed through into lots of different areas. FOMC, as expected, hiked rates by 25 basis points to 5.5%. And again, you know, it just goes to show that they've still got the strongest economy. They're still trying to slow it down, but they're doing it much slower now. And any future rate hikes will be data driven. You know, there is still a strong chance, in fact a stronger chance I would say now, that they do seem to be heading for that soft landing. But of course, you know, when we look at the other data that came out, so we had the core PCE come in at 0.2% month on month, which would have pleased Powell, of course, especially as this is their key indicator for inflation. And then PCE came in sort of for year on year, came in actually lower than expected. It came in at 4.1%. Durable goods were up. That's 4.7%, which was a big beat. You know, it was only expected to come in at up 1%. And GDP was higher as well, 2.4% annualized. So again, you know, I just really don't understand the weakness and all these bears of the dollar when you see the US performance being so good. Even initial jobless claims were lower down than expected. You know, they came in at 221,000. Okay, so moving on to Europe, they're not in such a great position. So with the EU, the PMIs manufacturing lower than expected again, came in at 42.7, you know, which is real contraction territory. Services still above 50, so still growth, but came in at 51.1. And of course on Thursday the ECB hiked rates 25 basis points, so they're now at 3.75. Any further increases will now be data driven, so the forward guidance has gone there. And you know, so we're going to have to wait and see what comes out in the way of data. And you know, for the US, they're in a good position now. Well, economically I think they are, but also the fact that you know, the FOMC committee have got almost 2 months of seeing loads of data come out before they're going to make their next decision. Okay, so in the Germany, PMI again was very weak for manufacturing. It was lower than expected, 38.8. I mean, you know, that is real sort of terrible performance, really. But their services, even though it was lower than expected, came in at 52. The good thing for Germany, well, if you can call it good, is that GDP was 0 quarter on quarter. So that takes them out of recession. Even though overall on the year on year, it's better than expected, but it's still negative at 0.2%. So then IFO came out, the business climate for in Germany, and that was 87.3, which was lower than expected. Although expectations going forward were higher than expected, they came in at 83.5. Consumer confidence is still low though, it's negative 24.4. CPI 0.3% month on month, so you know, improving. But year on year it's still 6.2%, and the harmonised is actually at 6.5%. So they've still got a bit of work to do there. You know, personally, I see Europe going back into recession, in contrast to the US, but that's just my personal view, just when I look at the macro picture. For the UK, PMI manufacturing was lower than expected, came in at 45. Services also lower than expected, came in at 51.5. So, okay, so where do we go from there? Let's have a look at Canada. So Canada GDP came in at 0.3%. In Japan, Tokyo CPI came in up better than expected at 3.2% year on year. The core came in at 4% year on year, and they adjusted their yield curve control. For the 10-year they've gone from 0.5% to they've doubled that to 1%. So you know, they are starting to make adjustments. You know, that their inflation is that bit higher than they would like to see. Earnings, you know, borderline. So, you know, maybe it's time that they do start to consider coming out of negative rates. Okay, Australia, we've had CPI came in lower than expected at 0.8% month on month, which is 6% year on year, again lower than expected. Now, PPI came in at 0.5% quarter on quarter, which is not so bad really, to be honest with you. And retail sales, disappointing, they came in at negative 0.8% month on month. Then looking at Switzerland, their ZEW was negative, lower than expected at 32.6%. Okay, so that was it for last week. You know, it was an interesting week. Markets were all over the place as usual. Yeah, shall we take a look at what's going to happen this coming week? Before we take a look at what's coming out next week, just going to run you through our Symax Fintech services. So apart from these that we produce 4 YouTube videos each week just to help you prepare for the week ahead. Then of course we have our daily newsletter, and that includes headlines, global news, and also my views. And as a subscription service, we can provide daily chart levels as well. Of course, the daily newsletter is free. So, one-day workshops, you know, these are just really to help you decide whether trading could be your next career, you know, whether you want to try and create it as a second income, or maybe you've just got some gaps, you know, that you feel could be plugged in your trading. Happy to help with that. And then our 1 week courses, they go a bit deeper. So here, you know, within 1 week you'll feel confident and competent that you can sort of make some of those high probability trading decisions. You know, in a week, are you going to become a trader? No, but it's certainly going to give you the foundations on which to build that trading career. And if you've got that inner trader, I will help you discover it. Okay, so then of course we've got our comprehensive accredited masterclass, which is designed to provide you with all the knowledge and trading skills required. And that's to trade any market and also any asset class, you know, and that's one of the benefits of coming to us is we do educate on every asset class, whether it's financial, commodity, or even digital. And of course, with some of our courses, there is also a free trading challenge included. So contact us for all those details. Then, you know, if you want to get to that next level, I can help you, just mentor you. I do anything from 1 hour up 1 day, or there's even a monthly subscription service for that. Consulting, we help companies with their FX and commodity exposure. And then, of course, we provide a mass of educational content to individuals, exchanges, and brokers. And if you're looking to gain one of those funded trading accounts, then our partner Nordic Funder offer one of the best out there. Very flexible. You know, you can customize it to how you want it to be as a challenge. And then of course you pass that challenge and you will get your funded trading account. Okay, so if you've got any questions on any of this, then just contact us at info@symaxfintech.com, or I'm at chris.tubby@symax-int.com. Okay, so I hope you stay with us for part 2.